Hello and welcome to Down South Finance. In today's video, we're going to be talking about the pros of having an HSA and how to open one. If you're interested in your financial journey and want to seek financial freedom, please hit the subscribe button down below. Now let's roll the intro. So your place of employment may offer you a HSA. My employment does offer me a HSA and I invest through health equity. In order for this, you had to have a high deductible health account. If your employer doesn't offer you one, you can always go through Fidelity. I'll leave the link in the description below if your company or job at work doesn't offer one. Positive thing with Fidelity is they do not charge you any transaction fees, no investment fees, no expense ratios. Once I'm done working, I will transfer my balance to Fidelity because even though health equity has a very small percentage of expense ratio for the investments you invest in HSA, they do charge a fee. So if we can save money, that's what we're going to do. As you can see below here, 2022 versus 2023 for how much you can contribute to. So in 2023, you can contribute $3,850 into your HSA. And then for family or married, you can invest $7,750 into your HSA. And then at 55 plus, you get a catch-up year. For every year over 55, that's $1,000 you can invest in there. And then the minimal deductibles when you have an HSA is $1,500 for a single person or $3,000 for the family plan. Maximum out of pocket is $7,500 for a single plan and $15,000 for a family plan with your insurance. Like I said, you can invest your money into this account. As not only is a savings account with low interest, but you can invest in like index funds, ETFs, or whatever the like health equity offers you, or Fidelity. So my work offers health equity, and the deposits go into the account on a biweekly basis. Once the account has $1,000, you may start pulling from it to invest the remaining money into an investment account, into their investment account. If I contribute, for example, if I contribute $3,500 into the account, I can invest $2,500. And the savings account portion always stays at $1,000. The money I continue to contribute to the account goes to the investments. Some people have the assumption that you can't roll over your HSA like a FSA. I'll show the differences here. But you can roll over your money to the next calendar, unlike a FSA. And then the health equity, there are fees, like I said, that are associated with investing your money. They offer Vanguard target date funds and index funds. I'm currently investing in the real estate index fund, and the expense ratio on the fund is 0.0083%. And the fund is VGSNX. I will leave that in the description below. I currently invest in this index because it grows tax-free, and the dividends are tax-free as well. You can get a quarterly dividend. Also, the HSA is a triple tax break, and the Roth IRA you have, like the Roth IRA, and you're not charged RMDs in your retirement years like a 401k, 403b, and so forth. RMD is required minimal distributions, which is why it's so important to max out your Roth IRA and your HSA first before contributing more than your company matches in your 401k because of the tax benefits later down the line or retirement. Keep in mind, the Security 2.0 Act will raise all RMDs to 73 in 2023, unlike in 2022 was 72. For accounts that require the distribution at certain ages is the traditional RA, the SEP IRAs, simple RAs, rollover IRAs, most 401ks, 403b plans, most small business plans. You can always roll over your 401k to a backdoor Roth to avoid these RMDs, and you can grow that tax-free with dividends as well as growth, but the topic is for another video. Now let's go back to the triple tax break. Now back to the triple tax break. With the HSA, and the pros with the investment vehicle, you can contribute pre-tax dollars, which lowers your taxable income for that tax year. Pay no taxes on the earnings. Withdraw the money tax-free now, or in retirement, pay to qualified medical expenses. You can even use this money you save for non-medical expenses after the age 65 without any penalties, but you are taxed the ordinary income rates on non-qualified withdrawals, just as a traditional IRA or 401k. If you're under age 65, you pay a 20% penalty on non-medical withdrawals and the tax in addition to that penalty. So it's better off to keep it in there and let the money grow, so forth. As you can see here, the 401k versus HSA, 100% tax deductible contributions, tax-free earnings, tax-free distributions for medical expenses, regular expense tax as ordinary income, no required minimal distributions. Both accounts let you make pre-tax contributions and grow tax-free earnings, but only as HSA lets you take tax-free distributions for qualified medical expenses. After age 65, you can use your health savings account for expenses. You'll simply pay ordinary tax just like a 401k. Here are some just qualified medical expenses for your HSA. A study in 2022 stated a person 65 and older would need approximately $315,000 in savings to cover health expenses in retirement until they pass away. So it's better now to get ahead with this and grow a nice nest egg. Lastly, you should talk to someone about an HSA and estate plans. Let's say you pass away early, you can pass this on to your spouse or your heirs. There are three typical scenarios with the spouse, heirs, and so forth. Spouse is a designated beneficiary. Spouse is not the designated beneficiary, and your estate is a beneficiary. Please seek legal counsel for this because I'm not an attorney nor am I your attorney, and the estate rules are complicated. So I would look into the HSA. I would just contribute your whatever your company offers you for a 401k. 401k first. If it's like 4.5% match, 3% match, 6% match, whatever it is, do that. Then max out your HSA, and then max out your Roth IRA. And then after all that's done, look at your investment goals. And if you want to contribute more to your 401k, you can. This is the overview of the HSA. I know this is a lot, and if you have any questions, please do not be afraid to ask. I will leave all the links below, and I have some other articles to help with this research if you'd like to read more into this topic. Thanks again for watching, and if you stuck around, please consider subscribing to the channel. I'm trying to make weekly content, so thanks again. If you stayed until the end of the video, thanks for watching. Please like this video and comment if you have any questions. And if you couldn't tell, our dogs Yuma and Cooper would love for you to subscribe to the channel. Thanks.